Well, with that in mind, what we want to do is we're going to, looking at Chapter 3, go through a practice set using the cash method of accounting and then converting it to the accrual method of accounting so that we get the benefits of both sides. To do that, I would like you to turn your attention to page number 3.8, which is Sonja's Art and Frame Shop. That's the name of the company we're going to be doing it for. The top half of page 3.8 shows the balance sheet for Sonja's Art and Frame, and the bottom half represents the income statement for Sonja's Art and Frame. Now what I'd like you to do is look at the balance sheet for a moment and tell me how many current assets do we have listed there? Just one. The bank account is the only current asset shown there, right? Everything else down below there is property, plant, and equipment. There's, what is there, 2, 4, 6, 6 accounts that are property, plant, and equipment and accrual accounts, aren't there? Okay? Now, how many current liability accounts are there? There's 4 accounts, right? Okay, beginning with sales tax payable and going down to state withholding payable. So those are our current liabilities. Calculate for me, using those numbers for September 30th, how much working capital Sonja's Art and Frame has. Will you do that for me? $8,580, which is just the bank account less those 4 current liability accounts, okay? Now, calculate for me the current ratio. What is the current ratio? What do we have? It's a big number. Okay, I hear 11 to 1. Do I hear that again? I think it rounds. Is it 11 point something? What is 11 point? Okay, so 12 to 1. Okay, we'll just round it up to 12 to 1. Okay? Which is that good? Oh, that's phenomenal. Okay, how many companies are you going to find that have a 12 to 1 ratio? Very, very few. Okay, so let's also look at the balance sheet for one more thing. I will tell you that Sonja does have customers that owe her money. She does have inventory, but notice that they're not shown there. Okay, because she's using the cash method, and under the cash method, you do not record accounts receivable and inventory. Okay? So it's just not shown. It's not represented in there. She's got it, but she's not showing it. Down below in the income statement, she has 4 different sales accounts, right? Then she has 1 cost of goods sold account. Now the reason, why doesn't she have 4 different cost of goods sold accounts? Do you know? Because the same materials might be used in 3 of those products. Okay? Sometimes she's going to use glass for framing sales, sometimes wholesale, sometimes retail. So that she's going to use the same products, the same inventory, and so it would be very difficult to split out the cost for each of them. So what she does instead, she just has 1 cost of goods sold account. Now recognize that these are only cash sales to this point, aren't they? Why don't they include credit sales? Because she's on the cash method. And we don't record the cash sales until we actually get the cash, right? Or excuse me, don't record the credit sales until we get the cash. Okay, now we also have expenses. And these are all cash expenses. And we got several of them. And so this is the cash paid out. But yet she does owe for some things that she hasn't gotten yet. She just hasn't shown them yet. She's not going to show them until what happens? She writes the checks. Okay? She pays them. Okay. Now I want you to turn your books and look at page number 3.9 for a moment. Page 3.9 contains a complete chart of accounts for Sonja's Art and Frame. Draw an asterisk next to these 5 accounts. Draw an asterisk next to account number 220. Just put an asterisk, either side, next number, whatever. Draw an asterisk next to account 230. An asterisk next to account 300, excuse me. An asterisk next to account 400 or 500, excuse me, that again. Account 500 and account 700. Okay? And down at the bottom, I want you to footnote that, those asterisks, as being cash to accrual conversion accounts. Okay? Cash to accrual conversion accounts. In other words, while we're doing the daily entries of the sales and costs and expenses, we're going to ignore those 5 accounts that you just asterisked. We're only going to use those at the end of the month when we convert it from cash to the accrual method in a very simple entry. Now with that in mind, let's turn the page. The journals are done here. Okay? Again, these journals are very simple. And I'm going to take a moment and show you how these journals are created so that you have an idea of what's involved in this process. Okay?